Okay, welcome guys to my YouTube channel. Well, today I'll be looking at my mentor and seeing how he speaks about the 5 beginner mistakes that I keep you losing in pocket option. Yeah, I'm a victim to this. So let's dive into it.
Hey everyone, it is Klask, and today I'm going to be sharing the 5 most common mistakes that beginners make when trading on Pocket Option. As I usually do, let's get straight into the video and the proof. Perfect, so these are the common beginner mistakes, and before I get into that, as I said, let's just quickly start with a bit of the proof. So in the last 8 months, I've been trading on Pocket Option, and I've made over $230,000.
Bro, that's a lot of money. Bro, 230 USD. And he had a rough start. He was losing, just halfway between 0 and 20k. Bro, that's like 10k in a loss. Then he just slowly built it, lost. Then wow, okay.
Since December of last year. In just the last month and this month as well, I've been able to make $28,290 with only one losing day and closing each and every single day.
With only one losing day. Yeah, he's broken.
Green. And this is also one of my most recent withdrawals that I did of $7,500, which is also the same as 125,000 Rand. So now that you've seen a little bit of proof, you can get a better idea that this is actually legit and I actually am who I say I am. Now, let's get into the common beginner mistakes. We have setting no trade limits, trading in random markets, having no trading parameters, constantly switching strategies, and listening to, and let me actually change this, your emotions.
I'm a victim to number 2 currently. I could be like trading in a market and then the market just starts to be random and I still continue to trade because I need to change this mindset, I can be stubborn. I'll be like, okay, no, since I have 6 winning units, I can just make more. And yeah, beginning of a downfall. So let's continue.
Right? That's probably the worst one. Now, let's get straight into setting no trade limits. You need to understand that on Pocket Option, there is actually an option for you to go and set a trade limit. For example, over here, for a $10,436 account, you should actually set your trade limit to be 1% of that. Over here, that would be 100,46 right? Roughly around there. We can actually do $100 as a more conservative amount. For example, over here, you would see if I tried to take a $200 trade, you would see the notification pop up over here that says that the $200 exceeds the $100 limit that you have set. Because if you're trading on this account, let's say accidentally you add one extra zero. Now you're doing $1,000 trade, you're doing another one, you can see a $10,000 trade, and then if you accidentally click in the wrong digits, you end up risking your entire balance, and that becomes a 50-50, and you could possibly blow your money.
Yo, imagine trading your whole bank balance in just one trade. Yeah, that's the start. Well, that literally begins to be gambling at that point. And we don't gamble here. We're trading. There's a big difference.
So it's very good to set a constant trade size in correspondence to the trading calculator and a good 1% risk rule. As you can see, for example, over here, I can set $10,000 as my initial capital. I can make it dollars and click reset, and you can see the trade size automatically updates to $100. Over here,
Not gonna lie, guys, this calculator is goated. Like, yeah, you can track yourself in real time.
this calculator, you can go and track your sessions as well. If you want to get access to this, just click the link down below and you'll be able to join and start using it. All right, perfect. So that is setting trade limits. It is so important because not only does it allow you to be more disciplined when you are trading, but it also ensures that you do not over risk and end up trading an amount that you never actually wanted to. The next one is trading inside of random markets. Now, this is a big one because as we know, there are 3 types of markets. We have trending markets, whether it's an uptrend or a downtrend, and we also have ranging markets where the market moves sideways. However, a market type that is often neglected is ranging markets, and it has 3 characteristics. It has long wicks, right? That's the first one. It has long wicks, it has lots of gaps. So I'm going to put gaps over here. And it also has very fast movement, very fast candles. And I'm going to show you exactly how that looks right over here on this chart. So you can see, for example, this is all beautiful moving markets. We have beautiful downtrends, beautiful uptrends, and good retracements, and good overall trends. This is what we would call a random market. Before I get into that, this is what we would classify as a ranging market, where the market is moving sideways with good conditions. Once again, here's another beautiful example where it's moving sideways. This would be an uptrend where it's moving up nicely. This would be a downtrend where it's moving down perfectly and creating lower lows and lower highs. However, this would be a random market. And now we can go to our checklist to actually see that it meets that. We can see here, long wicks. Does this market have long wicks? Absolutely. We see long wicks over there, long wicks over there, long wicks over there, and long wicks over there, all over the show, right? The next one is, does it have gaps? Well, absolutely. Let's go and have a look at this market, and you can see this market jumps from this close all the way up here down to this close. Another one over here where it closes here, it jumps all the way down there. Another example is where it jumps from here all the way down there.
And you know the funny part is that you place your order a split second late or a split second early. It just gaps on you. Like you see this. See this? You could place a sell, right? If you're selling. Then this one, when it jumps, it can jump here and shoot up. Or it can just jump up, and then yeah, you're cooked. So random markets are a no.
So that is not a good market to be trading in. And the last one is, does it have fast candles? Well, the fast candles typically links back to long wicks, because if you have a market that's just pushing up very quickly, down very slowly, up very quickly, and then down very quickly, you're going to have a candle that looks something like this, with a candle like that, and these long wicks on both sides, showing a very volatile market. We see a long wick over there, long wick there, long wick there, long wick there, and long wick there. These are the types of markets that cause you to lose the most amount of money, because you would be trying to possibly place a buy here off of the up, down, down green pattern, and then you would end up losing because it gaps down on you. Or you try to place a buy on this example over here, the market shoots up very quickly, you think you've won the trade, and then it just shoots back down, right? Which is not necessarily what you want. So all three of those are characteristics of a random market. And if you are,
or you just place the buy here and it just then shoots back down. Yeah.
Going to be trading in a market like this, you're going to be losing money. We see even more examples over here. These massive gaps. That's the first check, right? Lots of gaps. The next check is, does it have long wicks? Absolutely. Wick there, wick there, wick there. Gaps there, gaps there, gaps there. Does it have fast movement? Absolutely. You can see these massive green candles and massive red candles, which show the characteristics of a random market. So always ensure that for a random market, you are combining all three of these so that you can actually go and identify that market so that you never trade in it. Always remember that you only need to be trading in a clear uptrend, a very smooth, clean structured uptrend, a clean structured downtrend, or a clean structured range. So that is the random markets done. Now, the next one is having no trading parameters. So what do I mean by parameters? Well, it is very simple. A parameter in trading is simply your take profit and your stop loss. Now, when you are trading, you need to have a take profit and stop loss. As you can see over here, I have a clear take profit of 12 units and a clear stop loss of -5 units. And that's how I trade each and every single time. So the take profit would be plus 12 units. The stop loss would be -5 units. But what does that actually mean? Well, for example, if I had that $10,000 account, which is what I'm trading on towards $1 million, make sure to go check that video out. I'm doing extremely well so far.
Hey, make sure you check that video out. He's making extremely good so far. Yeah. He's a goat. And he shows strategies every single 4 days. I think so. But he shows you new strategies on how you can actually implement your own strategy within poker options. So definitely check it out.
And I'm currently already up $436 after the first day. But you can see here, for a $10,000 account, 1 unit basically just equals to 1%, right? That is all that it is. And that 1% is your trade size. So for example, we would be doing $100 as a 1 unit trade size, and therefore the win that we get on it would be a 92% payout, which would be obviously plus $92. right? Now we can take that and times that into our parameters. So plus $92 times the 12 units over here would be roughly anywhere between $1,100 and 1,100, I'd say $1,200 actually. And then our stop loss would be set at we times that by $92. And then this would be minus $5 times the actual $100 that we have.
And why, you may ask? Because it's sort of like paying tax in a sense for using their platform. So they know you have an edge. That's why they charge you 8%. And when you lose a whole 100%. So yeah, they know you have an edge.
Stop loss would be set at minus $500 when I'm actually trading. Now you can see every single time we actually go into a session, we have a clear take profit as well as a clear stop loss, right? Each and every single time that we trade. This ensures that we never go past those levels. You'll see over here, the moment we hit a take profit, we get a notification that says take profit is reached. Every single time we hit our stop loss, we have a notification that says stop loss hits. Once that is done, we end our session, we come back the next day, we enter our brand new balance, and then we trade again, right?
I remember one time I just ignored it, and that was the baddest day, well, the worst day of my trading journey. So definitely do not go past your take profit or your stop loss, or else it's gonna go downhill. So this calculator definitely does help a lot, a lot. You like track yourself in real time, like I said, and yeah, it just keeps you disciplined. You just know your win rate over time, and you can actually increase and sharpen your strategy. So yeah, this calculator is his greatest invention so far. So yeah.
Having those parameters, right, is extremely important when you are trading, and simply not setting them is going to ensure that you are actually going to be losing money, right? If you're not setting it, you're just going to emotionally trade, you're going to overtrade, you're never going to know when to actually stop, and consequently, you're just going to be losing money. So having no trading parameters is an extremely scary one. Now, the next one is constantly switching trading strategies. Now,
I never had an issue with this one. I just had my own strategy, and that's my strategy, so I just went through with it. So I never had an issue with this one. But it seems like many people have an issue with it. We call it as shiny syndrome. Shiny object syndrome, yes. In the group chat, he usually talks about it like, don't change strategies. Guys, don't change strategies. And yeah, they helped a lot of people.
This is very common amongst a lot of beginners because they will search up YouTube videos, they'll try and study different markets and different ideas, whether they're trading in a ranging market or a trending market like an uptrend or a downtrend. And there's different strategies for either of these markets, and you need to understand that. However, they'll use a strategy. Maybe they use a moving average, Bollinger Bands, maybe they use the stochastic or the MACD.
Those are indicators, by the way. The MACD, Bollinger Bands, RSI, and so forth. Yeah, those are indicators built in pocket option.
And they start losing money with that strategy. Now, they've been using that strategy for literally one day. But what they don't realize is that a strategy does not perform across one day.
Yeah.
I mean, if you come back to the proof over here, you can literally see that over the last 8 months, I've managed to make $230,000 all using the exact same strategy, which I've literally gone and revealed on this channel. You can go and check the video. It's one of the first videos I ever posted.
Yeah, check it out.
And you can clearly see that there are points where I'm losing. There's a point there where I'm losing. There's a point here where I'm losing. I'm losing here.
Bro, you're not even indicating where or how you started, bro. You started in a loss. He started in a loss. Then he won a bit, then he lost. This man is too humble. But yeah, using one strategy while losing without changing anything, he just eliminates what doesn't work for him, and then that's it.
I'm losing here. I'm losing here. I'm literally losing over here, and over here. I'm literally losing so many times, but every single time at each and every single one of these points, I am never having this entire idea where I need to go and change my strategy. That never crosses my mind. Why? Because I've been
There you
doing
go.
this for the last 6 years. I know my strategy works, and I know that my edge is going to play out over the long run from December all the way until now, which is July. And that is what you call positive expected value.
Every single time you do the same thing for every day, you literally get better at it. That's just how it works. It's the rule of the universe. That's how that's how it is.
Positive EV. That positive EV will let you know whether your strategy is actually going to perform well or not. A lot of beginners don't understand the statistics behind trading and how expected value allows and ensures and guarantees you the results over the long run, even though you have losing trades just like this. So always remember that the strategy that you're currently using is more important to just stick to it. Why is that? Well, if you're so tunnel visioned and focused on one strategy, you are going to go and identify the weaknesses within that strategy, right? So within that strategy, let's say you're using a moving average and a MACD inside of a ranging market, right? Let's say MACD and maybe an RSI. Right? Let's say once you hit a support area like this, the RSI hits an oversold area and you know the market's going to start reversing upwards. That is your stock standard trade that is actually going to make you the money that you want. However, maybe you realize the MACD doesn't work for you. Maybe you realize that the moving average also doesn't work for you and you only want to use the RSI. Now you stick to the RSI forever. You don't go and add other indicators. You don't go and trade this inside of a trending market. You simply stick to what works, and that is it. Because now, if you just randomly go and decide to start trading this all inside of a trading market where the RSI never really works, and now you're no longer trading inside of a ranging market off of areas of support and resistance, well, you completely changed the entire methodology behind the strategy. And as a result, you've literally gone and reset your entire journey. Like imagine over here, right? Imagine I was seeing the
Damn, you totally reset your entire journey. So yeah, doing one thing at a time makes you sharper at it. And like I said, you just eliminate what doesn't work. So let's continue.
results that I wanted, or at this point right over here where I was losing, I went down literally $10,000 in December. Imagine at that point over here, I decided, you know what, I'm just going to change my strategy and no longer use it anymore. Well, I was not going to get the results like this, right?
Mhm.
Why is that? Because at this point over here, I started to realize and figure out what wasn't working, right? What is causing me to actually lose money? And then once you've identified what is causing you to lose money, you completely eliminate, you go all in on what is actually causing you to make money in your strategy, and then you stick to that over a long enough period, you will master the strategy and get the expected value as well as the results that you want to get days that make you profits like this each and every single day. Literally only one losing day, and also get you payouts just like this.
Damn.
Perfect. So constantly switching trading strategies is one of the biggest killers for common beginners, right? And a massive mistake that they are making, causing them to actually go and lose money. Now the last one, listening to your emotions. Now, let me tell you this.
Do not listen to your emotions. Let's continue.
Emotions and psychology are not a real thing in trading. And let me tell you why. Trading is based off of data, right? Trading relies on data. Trading also relies on statistics, right? Statistics and the math. Apologies for my writing if you can't read that, but you've heard my voice. Data and statistics combines and links back to this whole idea of expected value. Because let's say during this patch right over here, I started to get emotional. Let's say I got emotional here, emotional here, emotional here, emotional here, or during each and every single one of these periods of drawdown where I was actually losing money. Well, I just trusted in my expected value. I trusted in the maths, and I never got emotional. If I was losing money, I was never trying to revenge trade and make the money back. When I started going on these winning streaks, I was never getting excited and trying to over leverage when I was actually making money, because that's what causes you to lose more than you make on a day, and then consequently you actually end up losing that money, which is not what you want, obviously.
Yeah.
Expected value is extremely important. It lets you know that regardless of what happens on the day, you are still guaranteed to make money. If you had a losing day, that is fine, because at this point over here, you know that over the long run, from point A all the way to point B over here, it's going to be an upward slope. So
Just like how an uptrend behaves. Impulse, pullback, impulse. So if you have a pullback, don't worry, relax. Data is on your side. So yeah, basically don't get emotional. Become a robot in a sense.
As long as you just completely eliminate your emotions, you don't get greedy, you don't get overconfident, you don't have a fear of loss, you don't hesitate. There are so many different emotions and so many triggers that come in when you either lose or win. Completely eliminate that and just let the maths and the outcome of expected value do the talking, as I already explained, in terms of just constantly switching between trading strategies, which is what you shouldn't be doing, right? Psychology and emotions is not a real thing in trading. It is just a common beginner mistake that beginners do make because they can't visualize or conceptualize how a strategy or how their edge can actually play out over the long run in order to get results literally just like this, right? Because they'll just see one losing day like this, they'll get emotional. Let me use a different color. They'll see one losing day like this, they'll get emotional, and then the rest of the entire week or the next week just ends up being red and they lose money. However, if you just literally listened to every single one of these common beginner mistakes and avoided them, right? If we had a trade limit, we wouldn't over leverage. We wouldn't get revenge trading into our minds where we could start then losing money, right? That's the first thing. You can see how these all link to one another. If we weren't trading in random markets, well, we would know that specifically linking back to a constant strategy that we are using. If we simply just used one strategy, we would know well enough to never trade in a random market. If we were trading with actual parameters, well, we would eliminate all the emotions. We would let the strategy play out over the long run. Expected value will work in our favor because as a result, we know the strategy works. We know that it's going to bring us results over the long run and bring us consistency over the long run. So why get emotional on a bad trading day, on a good trading day? Rather let the maths do the talking, and then you will see after point A, or literally from point A all the way up till point B, it is literally this beautiful linear curve, roughly around 45 degrees, that is going to get you from that point all the way up to that point with a good expectancy and a good edge. This is an edge, right? In this edge, I'm not using any of these common beginners' mistakes. I always have a trade limit. I'm never trading in a random market because I understand how my strategy works because I've been literally sticking to it for the past 6 years without ever changing it. Also, I'm trading with parameters. As I already explained, I'm using the calculator over here to actually go and stick to the take profit and the stop loss parameters and actually track my session whilst it is happening live. Like I said, if you want to get access to this, click the link below and you can literally go and use it for yourself and join the community. But on top of that, guys, you can literally see that your emotions mean absolutely nothing. They don't mean shit because if you just simply
they don't mean. But truthfully, yes, your emotions, your feelings, they don't, bro. The market doesn't care how you feel. Feeling happy, you're feeling sad, you're feeling depressed, you're feeling anxious, feeling elated, bro. It doesn't care. You win or you lose, and you have an edge. Just that you gotta keep your emotions in check.
follow these four, let the maths play out, let your edge play out, and follow your parameters, follow your take profit, and understand the maths behind trading on pocket option and using a constant risk size with a good strategy that you can stick to, and understanding that over the long run, your edge is going to play out using the data and statistics. Well, then you are going to be getting results like this. It has to happen. That is just how trading works.
It's inevitable to lose. With all those information he literally presented, bro, it's inevitable to be successful. So, man, this guy is a goat. 6 years of trading, bro, 230 USD in just 8 months. 230,000 to be precise.
So not only have I given you the most common beginner mistakes, but I've literally just told you the 5 things that you actually shouldn't be doing, but rather what you should be doing on the other side, on the contrary side, the complete opposite side. And if you do those things, you're going to see remarkable results like this inside of your trading. It is inevitable. But yeah, other than that, I hope you enjoyed the video. These are the 5 most common beginner mistakes that I would highly suggest you avoid if you want to start getting a positive expected value, a good edge in your trading, and start making $230,000 each and every single 8 months.
Wow, that's it, bro. Okay, but yeah, go check him out, guys. Let me just do this. hmm That's it. So yeah, man, go check it out. Go check him out. Go check the community out. And bro, ever since I started quick trading, it's been a journey so far, but I'm really enjoying it. Hence, I can be in front of you guys, showing you all this. So definitely, this guy knows what he's doing. For 6 years, bro, that's like over half a decade. So wow, just gonna say wow. So guys, check him out. Check the community out. He has a free community, even though he has a free community. I'll drop the link. I'll drop the link to his YouTube channel. I'll drop the link to the community. And yeah, guys, have a lovely day, night, wherever you are. And shout out to Connor McClaskey. He's my mentor, by the way. So yeah, guys, have a blessed day and peace.